This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit higher this morning, even though we did have several economic reports coming in a bit on the weak side. Retail sales a bit slower than expected. Also, we had a consumer confidence number also coming in less than expected. However, futures continue to be supported by the ongoing Fed's quantitative easing program. There was one survey recently released indicating that economists thought that the Fed could scale back their QE at their March meeting. Now a more recent poll from another source indicating that it will not be until April until the Fed cuts back on their QE. And our own analysis suggests that it is likely to be much later than that. So the apparent unlimited quantitative easing from the Fed continues to support this market. I think this will be a trend that stays in place for quite some time, and stock index futures will continue to be well supported by the Fed's extremely accommodative policies. Over in the currencies, seeing most currencies lower against the US dollar. We had the pound weaker, even though we did have UK mortgage approvals coming in at a better than 5-year high. Also the yen under some pressure. Recently we had a comment from a monetary authority in Japan indicating that the central bank there will continue with their accommodative interest rate policies, which is bearish for the yen. Some short covering in the dollar index today. This with the Fed's two-day policy meeting today and tomorrow. So some short covering there. However, once the Fed meeting is out of the way, I would expect a new leg down for the dollar index as interest rates remain very low here in the U.S. And this is a situation that is likely to last for quite some time. And in the credit markets, we are seeing futures a little bit lower, ignoring the mostly bullish economic reports that we had earlier today, as traders focus on the heavy slate of supply this week. There's $96 billion in Treasury offerings today and tomorrow, of course, and we had an offering yesterday. So once these Treasury offerings are out of the way on Wednesday, I think the trend to the upside will continue. Also, we feel that there are possibly some buy stops based on the charts in the December Treasury bond above 139. So I would expect those highs to be taken out over the next couple of weeks. But once again, would not expect gains in the Treasuries until after the slate of offerings from the Treasury is out of the way on Wednesday. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.